The S&P 500 has opened flat today, and last week we saw core inflation numbers hum through. The market really didn't move too much, but this week we have the Fed's decision, and 99% of traders are saying that the Fed is going to pause, they're going to sit still, but 31% are expecting a rate hike in November. And this is going to be very important, not specifically on the decision. It's really going to come down to if we get a hawkish guidance or if we get a dovish guidance. Hawkish and dovish are just different ways of saying a more aggressive approach towards combating inflation, which would be hawkish and aggressive, or a more passive and dovish approach, which would be pausing or quantitative easing. And so anytime you hear someone saying that the Fed has dovish outlook or they're acting dovish, it just means that they're not aggressively trying to combat inflation or they're trying to stimulate the economy. On the other hand, if it's hawkish, that means that they're aggressively trying to fight inflation, usually raising interest rates, etc. And so what we really want to see if you're a bullish investor or you're bullish on the market is you want to see a dovish outlook. Now, this is going to come down to what you want long-term. Personally, for a long-term investor, I want lower inflation. I don't mind if the Fed becomes more hawkish to continue to combat inflation, to make sure that while it's going down, that it stays down and that we don't see a spike into next year. But of course, that would be bad short term for the market. What the market wants to see in order to move to all-time highs is going to be probably number one, a pause, which I think we're going to see no matter what. And more importantly, number two is a very dovish Fed, basically stating that they believe they have everything under control, saying that they believe that everything's going to be fine, basically patting the market, letting them know everything's under control and that at the end of the day, they're going to continue to combat inflation, but they think that things are fine. If they were to come out and say, you know what, not looking too good, we're worried about next year, which I don't think is going to happen. I honestly think we're going to see a dovish Fed, and I think that we're going to see in the next couple of months, the S&P 500 move to all-time highs. Do I believe we should be here? Honestly, probably not, but look at where we are. We have a symmetrical triangle, we have a cup and handle, there is no volume above 460 on these bigger time frames, and it does seem that if we can push through 460 on SPY, we will easily see all-time highs. And I think that a mix of the Fed's decision as well as next quarter's earnings are probably going to be what pushes the market back up to all-time highs. If not, we will adjust accordingly and we'll go from there. If you guys want access to all my trades as well as our Discord community, which is over 12,000 members, it's all free down in the description. Follow me on Twitter. I share my trades live there as well as long-term investments. And as always, guys, use proper risk management, and I'll see you next time.